Good afternoon, everyone. I've just been informed that we're actually live now. So, Chengetai, I'd like to welcome you. I didn't know you're already in the chat, but I'd like to welcome all the viewers that are joining us now in this one, our first episode. Should I call it season 2 of our On the Money conversations? I know we had quite a number of them last year. We took a break and we're having the first one now in 2021. But the gentleman that I have with me today is not new to the show or to the chat. We've had him before last year, and the episode that we had was very well received. Did you remember that we had Chengetai, who's the fund manager at Old Mutual Investment Group, responsible for equities investments? Now, maybe before I actually cross over to him and start asking questions on today's chat, I'll just give a recap of what we discussed the last time when we had him on the chat. We were speaking largely about the equities market, and some of the questions that we addressed were to say, you know, how does the equities market work and why does it exist in the first place? Then we also spoke about the types of companies that list on the ZSE. We covered issues to do with how one can invest on the ZSE, the pricing of shares, and how you can tell whether a particular share is undervalued or overvalued. We also considered factors that one should consider when putting together a portfolio and how possible it was to invest in the stock markets of other countries. Now, if you need more detail on that particular episode, feel free to visit our Old Mutual Facebook page and look at the On the Money live chat that took place on the 29th of October in 2020. So we can probably dub today's conversation as part 2 of that, because we are basically building on and zeroing in on a particular product, which is the new exchange traded fund. And Chengetai is just going to be dealing a lot about that today. That's the length and breadth of what we are going to be talking about today. But before we do that, I'll just ask you, Chengetai, to just give us a review of the ZSE in 2021. How has it been?
Thanks a lot, Patrick, and thank you to all the viewers who are with us today as we discuss investments with a special focus on the Zimbabwe Stock Exchange. It's good to be back again, Patrick, after that discussion that we have highlighted on the 29th of October. So if someone was to look at that period until now, you will notice that in November, the stock market went down some 8-9%. Then in December, it went up by 60%. And in January, it went up again, some 35%, then 15% in February. So until now, I would say one would have gained, would have recognized the return of 160%. And putting numbers to this, what it means is if someone had invested $1,000 during that period, they would have 2,600 now. So it has been a very good period from that time until now, and we are excited that the run has continued even into 2021.
I think that's pretty exciting. But from between the 29th of October when we had that chat and today, if someone had taken maybe not advice, but maybe the recommendations that we made on that particular day regarding investing in the equities market and took a position, how would their portfolio have changed by now? Are there any significant rises in particular stocks that one could be excited about?
Yeah, so the whole idea of investing, Patrick, is to, I would say there are 2 main reasons for investing. The first one being to grow your money, and the second one being to preserve. So it's either of these 2 or both of them. So by investing, you want to preserve your money against the things like inflation, against the things like your exchange rate movements. So during that time until now, the benefit that investors have found or have benefited from is that we have had a very stable environment. Inflation has been single digit for all that time. Exchange rate movement has been very, very small. And for someone who would have invested their money then, that money would have gained, like I said, 160% on average, and we are just looking at the market average, which is the index, the all-share index. But in there have been some exciting movements, the likes of your Hippo. Between that time and now, Hippo has moved more than 500%. We had the likes of your Masimba, Delta. Quite a number of counters have done quite well during that time. So if someone had invested during that time, they would have gained both in Zim dollars as well as in real terms in US dollars, because the exchange rate is almost stable during this time, and you are gaining 160% on your portfolio. So effectively, the gains would have been quite phenomenal.
Thank you for that, Chenge. So there you have it, viewers. If we're invested around about that time up until now, the stock market has definitely had an upward movement. And I think that's quite exciting news for those that actually did take a position, but it's never too late. The key thing to know is that with equities, they can swing anyway, but they are more or less long-term investments. So what would you say, Chenge, are the key drivers of this movement in the market? I know you've spoken about, was it about 160% that you highlighted increase? What are the key drivers to that movement in the market?
So the key drivers, I would say, is the optimism that was there in Q4 because of the recovery of the economy. If you look at Q4 in terms of exchange rate movement, the exchange rate movement was 0.45%. Inflation, like in Q4, you are looking at just 16%. Year to date, from January until now, inflation is just 9%. And there are a lot of other things like volume recovery. There were companies that were giving trading updates, the likes of Delta, Insco, Econet, during that time. And they were indicating or showing signs of some recovery. So we were in a period where people were optimistic, or people are optimistic about the outlook, despite everything that has happened with COVID. Even the IMF itself is looking at, or is forecasting, a 4.2% growth in the Zimbabwean economy, 5% growth in terms of the global economy. So all these things put together, they give a good picture about the outlook. And when people are buying stocks, they buy for the future. They buy because they are expecting to reap in the future, either in terms of share price movement or in terms of the dividends that those companies will be declaring. And also, there's the issue of limited investment options. So when people are looking at preserving their funds or growing their portfolios, at the moment, the ZSE is probably the best investment because it's liquid enough. It allows you to exit when you want to exit, and also giving you all these returns that we are talking about. So because of that, because of the optimism in terms of economic recovery, the volumes and everything, and also coupled with the issue of limited investment options, it's not a surprise that demand for stocks has increased. And because this is a market, it's moved by issues of demand and supply. So if there is more demand, you find your stocks actually going up. But like you said, Patrick, it's also important to highlight to the viewers about the issue of taking a long-term view on the stock market, because with a long-term view, you tend to be rewarded. Yes, we are talking about this return in 2021. We're talking about 1,000% in 2020. But we also want to remind viewers that back in 2019, the stock market return was 57% when inflation was 521%. So for people who invested in 2019, it would look like they were throwing their money away because the stock market was not doing well. But look at what the stock market has done now over the last 3 years. So we always want to urge investors to take a sort of a long-term view when they invest in the stock market, because with a long-term view, you tend to benefit.
Okay, thank you for that. I think that's quite exciting. Just to let you know also that, or remind you rather, that we are actually streaming live on Facebook. So I'm going to be taking a glance to see what the viewers on Facebook are saying, and I'll be throwing these questions at you as and when they pop up. I am actually seeing that there's one from Terence Mokova here, and he's asking about, it says true on limited financial markets and instruments. Okay, it's just a comment, but there was one that spoke about the movement in the market of average return over the last 10 years. I think you might just be thinking about that, or if you have the figures in front of you, you could comment on it later. He was asking to say, what has been the average return over the last 10 years? But as you think about that, the topic that we really are discussing today is that to do with the exchange traded fund. So could you just tell us a little bit more about it? What is an ETF? What is the exchange traded fund, and how does it work?
So we are quite happy to be talking about this topic of exchange traded funds. This is the first exchange traded fund to be listed in Zimbabwe, and as Old Mutual, we are definitely excited about that. So when you look at an ETF or an exchange traded fund, as it is called in short, an ETF, it's really a basket of securities that tracks an underlying index. So this basket can contain stocks. Like in the case of the ETF in Zim, it can contain stocks. This basket can contain commodities. It can have bonds. It can have many things. So in this particular case, in the ETF that we are talking about that is listed in Zim, it's a basket that contains 10 stocks. And in terms of ownership, you are buying into a fund just like you do with unity trust, because there's a close similarity between ETFs and unit trust, in that the ownership in ETFs and in unit trust is in form of units. You have a fund that you are investing in, but you don't own the individual stocks that are in the fund. What you own are units as part of this whole fund. So in short, I would say, an exchange traded fund is a fund that has some stocks or securities, and the exchange part only comes because it is now traded on any exchange. In this particular case, it's traded on the Zimbabwe Stock Exchange. So unit holders can sell units between themselves via an exchange, which is open, transparent to everyone. So in short, this is all about ETFs, but they are very, very similar to unity trust in terms of ownership and everything else.
Thank you for that, because when you first mentioned to say it was a basket of shares, the first thing that came to mind was unit trust. So I'm glad that you actually brought up that distinction so that our viewers can understand the difference between the exchange traded fund and the unit trust and how these two things work. But now, when it comes to the key participants in an exchange traded fund, what is the role of Old Mutual Investment Group in all this? Who are the key participants in the exchange traded fund, and what's the role of Old Mutual Investment Group?
Yeah. So for this one, Patrick, I'll just maybe try to take you through how an ETF is established. So first, there is an originator, or the person who thinks about this idea. And the originator in this particular case is Old Mutual Investment Group. They look at the market and say, look, based on what people are looking for in terms of the stock market, where is the interest? So you can come up, you now have to come up with your investment theme. This is where the ETF is also different from unit trust, because for an ETF, there is an investment theme which you are trying, which you want to try and achieve. So this investment, the originator, which is OMIG, came up with a theme, and this theme can be anything. It can be sector-based, it can be index-based, it can be maybe special characteristics-based or anything. So in this particular case, OMIG came up with a theme that they want to track the top 10 index, which is an index that is already established. So OMIG now becomes the originator. And there is now the sponsor who comes up with the seed capital. And in this particular case, it was Old Mutual Zimbabwe Limited who brought about a seed capital. Then in terms of the other participants, you have your custodian with CAPS Custodial. There is also a trustee in the form of Stanbic. There is the transfer secretary in the form of COPSEV, the sponsoring broker, Old Mutual Securities, as well as, yes, I would say those are your key participants. So the role that is played by OMIG is one, they've come up with a theme. And going forward, once they've come up with a theme, it is the duty of OMIG as the fund manager to rebalance the portfolio to make sure that it achieves what it was set to achieve, which is to track the top 10. So the top 10 is not permanent. It changes depending on market movements. So if there are any changes in the top 10, it is the role of OMIG to change that top 10 and rebalance the portfolio in line with those changes. And OMIG, the other role that they play, which is also very important, is the creation of units, ensuring that there are units in the market. Because one good thing about ETFs is that the primary market is open-ended until into perpetuity. So as long as there is demand for units, OMIG as the fund manager will be responsible for creation of those units. And then the other row, the last row for OMIG is to publish what we call the net asset value on their website or anywhere where investors are able to track the net asset value. So I'd say those are your key roles that are played by OMIG together with other participants. But like I indicated, there is a trustee, and this ETF is established by way of a trust deed. So the trustee is there to oversee everything that will be happening to ensure that it's transparent, the unit holders are not shortchanged, and everything is above board. That is the role of the trustee. In this particular case, the trustee is a Stanbic Bank.
Okay, so Chenge, when all these participants come together to actually create this fund, where exactly are you targeting? Who is the target market for the exchange traded fund, and who else can participate in it?
So I've talked about an ETF being a group of securities, and it's listed on the stock market. So when it gets listed, it trades like any other stock. When you go to the market, you buy the ETF, just like you are buying any stock, just like you are buying Delta, you are buying Econet, you are buying Insco. You just go there and say, I want to invest in the ETF. It has all the characteristics of a stock. The only difference that it's a stock that has other stocks within it. So in terms of who can buy, anyone can buy. Be it an individual, a company, a pension fund, a corporate, anyone can buy. As long as that person or that investor is eligible to trade on the Zimbabwe Stock Exchange, they can buy the ETF. So it's an investment which is open to everyone. It has all the characteristics of a stock, but the only difference that it's a stock with other stocks in it.
Okay, thanks for that. Now, when you mentioned that it's a stock with other stocks in it, right, and it trades like any other stock, what's the investment objective for that? Why would we then go and list this ETF as Old Mutual and then trade in it? What's the investment objective?
So we want to give convenience to the investing public. We want to give convenience in that when you go, let's say you have $10,000, Patrick, and you go to the stock market. When you buy one stock, you are open to the volatility within that stock, and therefore you are open to risk. And as they say in the investment community, you don't put all your eggs in one basket. So you want to diversify your investments. But here is an investor who has 10,000 who wants to buy stocks. How much can they diversify with that 10,000? There isn't much room, probably 2 counters, maybe 3. But then with an ETF now, all you are doing is you are buying one stock. But within that one stock, we have diversified for you. You are getting access to 10 stocks. You bought the Old Mutual Top 10 ETF. Within that stock, you have access to CBZ, you have access to Delta, Econet, Insco, Cassava, Hippo, and so on. All the 10 stocks which are in there, you now have access to them. So if there is anything that is exciting that is happening with Delta, you also benefit because you are a holder of a stock that contains Delta. If Delta declares a dividend, that dividend will eventually come down to you. Econet, the same thing. So if you have Econet, Delta, Cassava, all declaring dividends, you have all these dividends eventually coming to you. So we are bringing convenience to the investing public in terms of holding a diversified portfolio. For them, there's no need to be shopping around, telling a broker to look for this and that. You just go to your broker and you buy the ETF, and already you have diversified your investment. So there is that element of convenience that is being brought by the ETF. So that is, and in terms of our objective, when you are setting up an ETF, I talked about an investment objective where you say, what really do you want to do? In our particular case, we looked at the market and said, maybe people are more interested in your heavyweight stocks because they are solid, they are supported by fundamentals, and also they are less risky. That is why we targeted the top 10 to say, let's give people exposure to the top 10 stocks by market cap. So our objective is to track the top 10 index by investing in the ETF.
Okay. Okay. Now, I think that sounds pretty exciting, and I'm hoping that our viewers can actually understand everything that you're saying, because, you know, when you speak about that objective and you speak about the diversification in one stock, but you've already diversified and invested in 10, and dividends from all that are declared in all these other counters can then filter down to you, I think that's quite exciting. Now, what strategy are you using to actually achieve that objective? I know you have highlighted a number of things within the objective for the ETF, but what's the strategy that you are using to achieve it?
Right. So for people, let me start by saying, for people to understand or to fully understand the ETF, there is a prospectus that is first published for people to get to familiarize themselves. So it is also important, Patrick, to refer investors to this prospectus. If people want to see the prospectus, they can go to the Old Mutual Zimbabwe Limited website, and within that website, they go to the Old OMIG page, and then go to 2020 publications. The prospectus is there. That prospectus help to respond to your question, which you've just asked, Patrick, to say, how do you achieve this objective? So there are so many strategies. We can have two fund managers having a top 10 ETF, but pursuing different strategies. So this question that we have asked, Patrick, is very important because it helps people to understand what is really happening behind the scenes. In our particular case, we use the full replication strategy, and by that, in simple, we are saying we replicate the top 10 index in full, as it is on the ZSE, is what we will create in the fund. If on the ZSE top 10 index, Delta has a weight of 20%, we will make sure that in the fund, Delta also has 20%. If Econet has 15% in the ZSE top 10 index, we will also put 15% in the ETF. So our strategy is the full replication. We replicate the top 10 index as it is in the ZSE top 10 index. So that way we ensure that our returns, or the returns that we are getting on the ETF, are very, very close to the top 10 index. It may not be close like 100% because you also have differences in fractional shares, because as you are creating, the weight would be, say, 27.13%. And when you calculate the number of shares, you get a fractional share. So you end up rounding those shares, and those differences will create some minor differences. But in terms of the long-term picture, you will notice that the graphs will have a correlation which is almost close to 1.
Thanks, Chenge. I know that you have been noting, the individual shares that constitute form that basket of shares in the exchange-traded fund. But for the sake of viewers that could be taking notes, could you just break it down again? Which counters fall into that basket of shares that constitute the ETF?
So this is the top 10. And like I said earlier on, to say the top 10 is not permanent, because it's based on your market cap as at a particular date. So for the top 10 index, it's rebalanced every quarter. And right now, we are looking at the weights as they existed on the 31st of December, where CBZ has a weight of 27%, Delta 14%, Econet 11.5%, Insco 9.8%, Hippo 8%, Cassava 7.8%, Padenga 5.9%, BAT 5.3%, OKZIM 5.2%, and FBC 4.7%. So you will notice that between 31 December and 31 March, there will be a lot of changes in the market. So as at 31 March, we are going to have a real look at the top 10 based on the market caps as they exist at that particular time. And then we do a process that we call the rebalancing process, where we are now saying Delta, which had a weight of 14%, now has a weight of 22%. CBZ, which had a weight of 27%, now has a weight of 19%. Econet, and so on. So this top 10 changes every quarter, depending on movements in the stock market. So it is the responsibility of Old Mutual to ensure that rebalancing is done. So I want to reiterate that the top 10 is not permanent. It changes every quarter, and the top 10 index is managed by ZSE. And they tell us what will be in the top 10 in the next quarter, and then we rebalance likewise.
Okay, thank you for that. I think that's very clear. And then when it now comes to the actual advantages of investing in an exchange-traded fund, what would you say are the advantages? How beneficial is it to be investing in the exchange-traded fund?
So there are so many benefits. The first one that we have already talked about is the diversification benefit. We have talked about this one and how it helps investors. Then the second one is the issue of transparency. The transparency I'm talking about here is twofold. There is transparency in that an investor knows exactly where their money is being invested. When you are investing in a unity trust, or maybe in a managed portfolio where you give your money to a fund manager to manage, they may not open up to say this is what we are going to buy. They will buy so many stocks depending on how they see the market. But for an ETF, you know exactly where your money is being put. I've told you the weights of the top 10 as it is right now. And come 1 April, you know exactly how I'm going to rebalance that portfolio, and how, as Old Mutual, we are going to ensure that the stocks, the fund is rebalanced to ensure we track the top 10. So there is transparency from that level, which is good for the investor because they know where their money has been put. And there is transparency in as far as the pricing is concerned. An ETF trades on the Zvobgo Stock Exchange. The pricing is open to everyone. People can see what is happening to their price in terms of demand, how many units have been bought today, at what price, what is happening. There is that transparency. In terms of settlement, the settlement is done by an independent party. It's done by Chengetai, who do the settlement. In terms of record keeping, the record keeping is done by an independent party. In this particular case, there is the transfer secretary, COPSEV, where they keep the record of all the unit holders at any given time. So there is that transparency where you have so many people at play, and you know that the fund there's no room for manipulation. The other benefit or the other advantage is that the ETF is one of the few products that is regulated so much. Because for an ETF, there's a double layer of regulation. It's regulated under the collective investment scheme, which is supervised by the Securities and Exchange Commission. There's a thorough process that you go through for you to list an ETF, and there are certain things that you have to adhere to, which are in the Collective Investment Schemes Act. So there is that level of regulation that gives investors some level of comfort. And then there is the second layer of regulation where this is now a listed stock. So by listing on the Zimbabwe Stock Exchange, it's also open. It's also under the regulation of the listing rules of ZSE. So it's an investment that gives comfort to investors in terms of security, in terms of the security of their investments. Then I've talked about the trading being done in an open manner. Then the issue of volatility, where I said earlier on, if you invest in one stock, then you are open to the volatility that you see in that stock. But when you invest in 10 stocks, which is what this ETF is giving you, there is now less volatility, but at the same time benefiting from the stocks that are within that ETF. Then the last benefit, Patrick, is the issue of liquidity. The ETF is liquid because of the presence of another market participant, which we call the market maker. The market maker, the role of the market maker is to make sure that when an investor goes to the stock exchange looking for stocks and they can't find units on the Zimbabwe Stock Exchange, they go to the market maker and the market maker will be able to provide units for them. Currently, the only market maker that has been registered by ZSE is Old Mutual Securities. But I understand they are also in the process of registering other market makers. So the presence of a market maker ensures that the ETF is liquid, in that you can get the stocks. And when you want to sell, and you can't sell on the market, you go to a market maker, and the market maker should be able to provide a market for you by buying that unit away from you. So you can see, Patrick, there are so many benefits that this investment gives you. That is why, as Old Mutual, we are excited about having provided this investment to the investing public in Zim. It's also maybe if you look at other African countries, I think we are now like the 10th or 11th country to offer ETFs. Other countries have already done this, but we are excited to have provided this kind of investment to the investing public in Zim.
Thank you for that, Chenge, and it really is exciting. But despite all the advantages that you mentioned, it still is an investment, and with every investment, the investor carries a certain level of risk. What would you say are the key risks associated with the ETFs?
You have rightly pointed it that this is a market. We can talk about all these advantages, we can talk about the returns and so on, but at the end of the day, this is a market and it has risks. So I just want to highlight about 3 risks that you will find with ETFs. The first one is the tracking error risk. And in simple terms, we are saying the objective is to track the top 10 index. And if this ETF fails to track that top 10 index, where you say the top 10 index return is now, say, 60%, but the ETF return is maybe 40%, it means we will have failed to track the top 10 index. And that, in financial terms, is called the tracking error. We are failing to track what we wanted to track. So there is that error. And that error can come as a result of many things. One is the issue of holding onto cash in the portfolio. So if you hold on to cash, say in the form of dividends, we've talked about these dividends from these top 10 stocks. So if you hold on to cash in the fund, the fund will now be carrying dividends, and that cash can dilute the returns if the market is going up and you fail to track the top 10. So what we have done to mitigate against this risk in terms of dividends is that our dividends, or the dividends that will accrue to this fund, will be paid out monthly. We don't want this fund to hold on to cash. So as the dividends are declared and are paid into the fund, they are also at the same time paid out to the unit holders, less the expenses that the fund will be meeting. So there is that tracking error risk that can happen. But I've already talked about our the mitigation part. Then there's the issue of liquidity, where this is an investment which is based on the stock market. So the liquidity can be as good as how liquid the fund is. But in terms of mitigation against the liquidity, there is the market maker, who I say is there to ensure liquidity. But maybe for the big investors who will be holding on to, say, millions of units, probably the market maker may have a challenge. But then, because our market is liquid enough, where we have a market that is trading as much as 100 million on a daily basis, then it provides the liquidity that one requires if they want to exit. So there is the issue of liquidity, where in a bearish market, you may find that it may not be possible for you to liquidate as quickly as you want. And the other risk, which you already talked about, is the market risk. This is the market. So your investment is open to the market dynamics. If you invest 1,000 today, your 1,000 is not guaranteed. That 1,000 would depend on market movements, where if the market goes down, it means the value that we have invested can also go down. And if the market is going up, your investment will be going up. So those are some of the key risks. But in terms of the market risk and how we have tried to mitigate this, we made sure that the kind of ETF that we have provided to the market is a market that contains the best counters in terms of market cap. These are the best traded counters. So it shouldn't be very in terms of returns. You should be getting returns that are close to the market dynamics, because by investing in this ETF, you are tracking almost 70% of the market, because this is where the top 10 is.
Okay, thanks, Chenge. I think the viewers would also be interested in knowing what the current net asset value for this ETF is and how you have derived it. How are you deriving the net asset value for it?
Yeah, that's a very good question, Patrick, because I've noted that from the way the net asset value is talked about when you are looking at individual stocks is different from the net asset value of an ETF. So when you are looking at individual stocks and you talk about the net asset value, you are looking at the book value of that company. But in an ETF, for a net asset value, you are saying this is the value of the portfolio today based on how the market is traded. Divide that by the number of units, the same way you calculate the unit price, where the unit price of a unit trust, of an interest fund, where you value the portfolio and say, based on today's closing prices, the value of the portfolio is 200 million. How many units do we have in the portfolio? We have 130 million. So the net asset value is $1.58 or something like that. So the net asset value as we speak right now is at $1.62 as of today. And This is the value of the portfolio divided by its unit, the number of units in that portfolio. So what it's the main purpose of us or of a fund manager listing this ETF is to ensure that you give guidance to the market, because remember, they're investing in a fund that has 10 counters, and the dynamics within those 10 counters may be difficult for an investor to follow. So the fund manager is giving guidance and direction to where that fund is, to say, yesterday the net asset value was $1.63. Today, the net asset value is $1.62 because of the movements that have happened within the ETF. So basically, the net asset value is your market value of your portfolio divided by the number of shares, and it's published on our website on a daily basis. As we speak right now, today's net asset value has been published. But there's a difference between the net asset value and the market price. We are saying, as Old Mutual, we are saying this is the net asset value or the value of the portfolio. But the market can price that in that ETF the way they see it, because of many factors. Because they are probably bullish about the outlook, they would say, yes, your net asset value is 162, but I'm prepared to buy the units at $1.70. Someone will say, I'm prepared to buy units at 180 if this is where they are available, because it's now a market, which is where you have, earlier on we were talking about the differences between an ETF and the interest, where the ETF is priced at the end of the day, and ETF trades continuously throughout the day, depending on market dynamics, demand and supply factors, and the difference between the net asset value and your market price.
Okay, thank you for that. Now, in your explanation of it all, I think you just took us back to the issue of the unit trust. Now, with the ETFs and the unit trust, do these two things compete with each other, or can they just coexist in the same market?
Yeah. So earlier on, I talked about the similarity between these two, and in terms of whether they are competing, I'd say no, they are not competing. They actually complement each other. Because with an ETF, remember, with an ETF, there is a stated objective to say, this is what we are, this is our objective. In this particular case, we are saying our focus is on the top 10 stocks. We don't, at this particular time, we are not worried about what happens elsewhere. Our focus is on the top 10 stocks. So if you have interest in the top 10 stocks, you buy the ETF because you want the top 10 stocks. Who knows, maybe tomorrow there will be another ETF that tracks the banking sector. And if you are interested in the banking sector, you just buy the ETF for the banking sector, instead of you going to the market to look for FBC shares, NMB shares, Barclays shares, and so on. You just go and buy the banking sector ETF. But with unit trust now, unit trust gives you room and flexibility to look at the whole market. The whole market has 55 stocks, and it gives you the flexibility to say there is something exciting happening at Pro Plastics. But Pro Plastics is not in the top 10. So the Unity Trust would find itself investing in Pro Plastics and benefiting from what is happening in Pro Plastics. But the ETF cannot do that because it has an objective. That objective is top 10. So even though there is something happening with the Pro Plastics, they'll just say, is Pro Plastics in the top 10? No, it's not. So there's no way that you can sneak it into the top 10. So basically, these two really complement each other. They are not really competing funds. They will coexist as long as an investor knows their investment objective and what they want to achieve. They can invest in both the ETF and in the Unity Trust.
Now, Chenge, in your last comment, you also just spoke about the possibility of more ETFs being listed. Is that something we can expect on our ZSE?
Oh yeah, I think so. we are excited as Old Mutual to be the first ones to be listing an ETF, but there is room for more ETFs. Remember, I said the ETF is really about identifying a certain objective. If there is something exciting, say in the banking sector, it's no surprise that tomorrow someone will just wake up and you have a banking sector ETF. And there are also other considerations, like your characteristics, like say liquidity. There's a possibility that someone can say people are interested in the most liquid stocks. So let's take the top 5 liquid stocks and then you list them as an ETF. So there is a room to create more ETFs. As Old Mutual, we are also looking into that, and I understand there are other players that are also trying to list ETFs. And remember, ETFs are not just equity-based. They can be commodity-based. So if there is room, there's room for someone to say, I will list a gold ETF, which is tracking the gold and so on. So there's that possibility. So we are saying there's room to have more ETFs on the ZSE into the future.
I think that's exciting news for investors. I'm going to be crossing over to Facebook now just to see what questions are there. But before I do that, maybe one last question. How do the trading costs of these ETFs compare to ordinary shares?
The ETF trades just like any other stocks, and the trading costs are the same. In terms of settlement, it's T+3 for individual stocks. It's still T+3 for the ETF, and the trading cost around trip. I think round trip is about 4.13% for buying and selling. Is the same with an ETF. So the trading costs are basically the same.
Okay, thank you for that, because there's actually a viewer on Facebook, Terence, who's actually commenting on that to say that he notices that the ETF costs are the same as buying an individual stock. And he comments to say best practice has been to say that the ETF investment is cheaper than buying in a single company, rather than I think he's making reference to the US market and the SA market. So he's asking to then say, is it possible to lobby with the ZSE or SEC to lower the cost of buying an ETF?
That is quite true. What Terence said is quite true about other markets, that ETFs are traded at a lower cost. We have made presentations to ZSE in as far as that is concerned, and it's also something that they are looking into in terms of the trading costs. But what Terence has just said is quite correct, that in other markets the trading costs are much lower. But for us, I'm sure this is a starting point. ZSE, I'm sure, will continue to engage with the authorities in as far as that is concerned.
Okay, there's another comment here from Tawanda. Now, you did speak earlier about, the possibility of more ETFs being listed, but his question is to say, are you considering introducing a ZSE small caps ETF? I'm not sure what a small caps ETF is. If you could respond to that one. And I'm not sure if he's talking about you as Old Mutual introducing one, or is the market in general considering the introduction of a ZSE small caps ETF?
Yeah, so it is very possible to have that, because when you are establishing an ETF, you first have to create an index. So the index is already there because there is a small cap index on the ZSE. So the index is already there, and what someone needs to do is then just to look at which stocks are in the small cap index. For you to then track it. But I wouldn't say it's something that we will consider doing, because small cap is its own advantages and disadvantages. But the major drawback with a small cap index is the liquidity that you find in the small cap counters. Are you able to get in and out suppose you need to rebalance, or suppose you need to create more units, are you able to go and buy shares of company X, which is a market cap of 200 million? So if someone brings in 10 million, which they want to invest in say you want to buy units worth 1 million, in terms of going to the market and getting shares worth 1 million in a small cap counter with a market cap of 200 or 300 million will be a really difficult task. So the rebalancing will be a problem. But I'm not dismissing that possibility, but I'm saying it has its own challenges in terms of doing that, because you may find your fund having a huge tracking error because you are unable to buy certain stocks, or you are unable to offload them to the market when you need to do the rebalancing.
Okay, thanks, Chenge. Tando Makaya is also asking, what's the minimum RTGS investment to get the ETF? I'm assuming it's comparing it to the normal shares and the ETF. Is this the same? What's the minimum investment that one is required to make in Zim dollar terms to buy an ETF?
So when someone is buying an ETF, I would say there are three different ways of participating in an ETF. The first one will be buying shares through a broker, where you open an account with a broker and you buy an ETF just like you are buying another stock. So with the brokers, there are 18 licensed brokers, and their minimums differ from one broker to another. So it really depends on which broker you are dealing with. Then the second method is to buy your units or via ZSE Direct. ZSE Direct is its own minimum. So investors can buy the ETF via ZSE Direct just like they are buying in other stocks. So if you go via ZSE Direct, it has its own minimum. I'm not quite sure what the minimum right now is, but for brokers, the minimum would be anything between 5,000 and 10,000 in terms of the minimum. But it will really depend on which broker you are dealing with and which broker you are talking to. Then the last method of buying into an ETF is to go via what we call the primary market. And the primary market is when you are investing through OMIG, and the minimum investment for the primary market. And for the primary market, you will be buying units at the net asset value, where you create a portfolio in similar proportions or to the ETF, and you get units at a net asset value. The minimum there is 1 million units. So if you multiply by the current price right now, which is $1.80, it means the minimum for you to buy units via the primary market is 1.8 million. Via ZSE Direct, I'm not quite sure what the minimum is, but I would think around $1,000. And via brokers, it depends on which broker you are dealing with. The minimum can be anything between 5,000 and 10,000, depending on your broker and the relationship with that particular broker.
Thank you for that. I think you broke it down quite well. I'm still just going through our Facebook comments here, and one of the viewers is asking to say, what is ETF? How do I purchase unit trust? I'm still a long way from learning, but this is the reason why we are bringing these financial education programs to you. I think Chenge has explained it. Kindly feel free to just go over this recording. It's going to be saved on our Facebook page, together with the last one that we had that was dealing with largely the equities market that we published on the 29th of October in 2020. I'm sure you'll get a lot of information there. But if you still do have questions, feel free to ask us, and we'll direct them to the people that could respond to them best. Okay, there's another question from Susan, and she's saying, given the prevailing economic climate, is the ETF investment option open to all? Is this something that I think you responded to this, but you could just touch on it again. She's asking to say, is this open to everyone given the current economic climate?
Yes, an ETF is open to anyone who is capable of buying or trading on the Zimbabwe Stock Exchange, an individual, a company, a pension fund, a trust, anyone who can trade on the Zimbabwe Stock Exchange can buy an ETF. All you need to do is go to your broker, and you should be able to get financial advice, and also they will put a trade for you on the market. Or you can go solo via the ZSE Direct, and you'll be able to place your order and buy your units.
Okay. There's a question from Dave, but it's similar to one that you responded to. I'll just read it out so that you can take note that it's been responded to say what's the minimum investment in the ETFs. And I think you just broke it down as per broker, whether you're going to the primary market and so forth. And then there's another question here from a viewer that says, is there any difference between the ETFs and derivatives? If you compare go ahead.
So the ETFs actually is a good groundwork for the formation of derivatives. They are not the same, but they if you look at how derivatives are traded currently in Zim, there is no derivative market. We are not at the moment able to trade derivatives. But if you look at how the market has been developing and where it has been going, mind you, the statutory instrument for the establishment of ETFs was only gazetted last year in 2019, and through all this what SEC is doing in terms of development of our markets, we also hope that our derivatives will come on board. And once the derivatives come on board, you will also see the important role of having an ETF in terms of laying the groundwork for the creation and trading of derivatives. But in simple terms, they are not the same. But later on, as derivatives come on board, you will notice some similarities in there.
Okay, I've got another clarity-seeking question here from Tinashe. He says, when you said rebalancing, is it that you are buying certain stocks and offloading others so as to balance according to the quarterly index result? When you refer to rebalancing the ETFs, what exactly are you doing? Are you buying and offloading certain stocks so that it's balanced according to the quarterly index result?
Yes. That is correct. Because remember, at the end of the day, we said our investment strategy is full replication. That means we are buying stocks in the exact weights as they are in the ZSE Top 10 Index. So once the Top 10 Index changes on the 31st of March, we'll also rebalance the stocks. So if you look at the top 10 last year, Hippo was not in the top 10, FBC was not in the top 10. We had other stocks that dropped. The likes of RRTG was part of the top 10, but they dropped out on the 31st of December. And this is what we have right now. And come 31 December, we are still going to relook at the top 10 and then buy stocks that are in the top 10 and offload those ones that will have fallen out of the top 10. That basically is the rebalancing that the viewer is talking about. That is exactly what rebalancing is all about.
Okay. Thank you for that, Chenge, and thank you, viewers, for asking all these questions. I think I've exhausted most of them, if not all, that I could direct to Chenge. Some are just comments. We've got Willard saying he's loving it. Nyari saying, way to go. Rumbi saying, well explained. I see a number of people saying, well explained. Chenge, you must know your stuff very well. And these are the comments that are coming in from our viewers. I'd like to thank you very much for tuning in. And our time is running out now. So before we actually do sign out, I'll probably just come back to you, Chenge, and say, would you have any parting shots as usual for the viewers, what they need to be looking out for, any advice that you'd want to give potential investors out there regarding either the ETFs that we've just discussed or investment on the Zimbabwe Stock Exchange in general?
Yeah, so like we said in the last discussion, Patrick, there are so many advantages of investing on the stock market. I have a friend, Kudzai Mbayoa, on Twitter she now has a slogan to say "Edzaima shares, it will end in wealth." That is her slogan, and she has articulated very well how she has benefited from investing on the stock market. So my parting shot, Patrick, is that if you want exposure to the stock market, please feel free to get in touch with us. We have everything for everyone, because if you want to invest on the stock market, there are 55 companies that are listed there. The question, if you are not really familiar about what is happening on the market, you don't know where to start. So the best way is to go through through investment advisors or investment asset managers like Old Mutual. Come to us, let's talk about this, and we'll give you the necessary advice. You can invest in unit trust, the minimum is $500. You can invest in an ETF where we say the minimum is about $5,000. You can come and we talk about a managed portfolio where the minimum there will probably be maybe a few millions or so. So there is, for everyone, there is a product that gives you exposure to the stock market. All I'm saying to the listeners and the viewers, Patrick, is that if you haven't been investing in the stock market, the next best time to do so is now. Better you start now. Let's have these conversations going on. Our page is your contact, how you can contact us, and how we can walk this journey together. Thank you very much for that, Patrick.
Thank you, Chenge. And to our viewers, there you have it. If you need more information regarding how you can invest in the Zimbabwe Stock Exchange, please feel free to come through to Old Mutual Investment Group. You can get the contact details on our Old Mutual Facebook page. In case, actually, I'm just directing you there so that you can see exactly what is taking place on the Old Mutual website, the Old Mutual Facebook page. You can also get information on our Instagram pages. So all the information is there. These recordings are being saved on those pages as well. So you can just feel free to go over them and recap on what we have been saying. But I'd like to end today's conversation here and wish you all well and encourage us all that whenever we're having these live chats, kindly feel free to tune in, let your friends know when we are going live, because we will not stop sharing on the financial education that we are embarking on. So between now and the next episode that we're going to have, I wish you all well. And I'd like to thank you, Chenge, for joining us again. You've always been a good sport. I think the last conversation was very informative. So has this one been. I think there's a lot of information and a lot of gems that you dished out to our viewers. I personally learned a lot, and I'm hoping that our viewers did the same. So up until we have you again, I'm not sure which guest we're going to be bringing on, but the conversations are always going to be exciting and informative. So up until we meet again, I'd like to thank you and wish you all a good evening.
Thank you.
Thanks, Chenge. We'll be signing out now.